Hey guys, it's 2 o'clock here on Monday. I just wanted to give you a quick video to talk about what we see in the markets and kind of what's going on. Because if you look at um, if you look at Twitter, you look at Facebook, you read analysts and things like that. What you're seeing um, are people that were bullish a couple weeks ago doubling down on their bullish stories, and you're seeing people that were bearish a few weeks ago doubling down on their bearish stories. And so that's causing a lot of confusion, and basically you're starting to see people really get caught off guard and off balance in these markets. And a move like this will do that for people. I mean, this is a long way in not very many days, right? So I mean, in the last 1, 2, 3, 4, 5 days, wheat has dropped, darn near 90 cents. Almost hit $1 today at our low. I think we missed it by 4 cents. So big move down in wheat. And so now you're going to start hearing a lot of talk about, hey, it's oversold, too far, too fast. It's got to rally. It's going to bounce back higher. There's still a drought in the plains. There's a drought in Australia. There's weather issues all over the world. There's a war going on. All that stuff, and it's people really talking their positions. But let's take a look. Let's take a step back and look at where wheat could really go. So I'm going to pull this back. This is the March. This is the May contract, and I'm going to back this out to a monthly chart. Okay, so you can see where we've come from and kind of how we're set up. Now, when we moved higher, remember we reset from $4 a bushel, and we reset from 4 to 8 before we ever knew that the Ukraine was coming into play. And what did that was shortages in other parts of the world, and we started having weather issues, and we had declining acreage, right? And I don't have the exact numbers in front of me, but in 2019 and 2020, 2021, we had I think the lowest acres we had planted in over a century here in the U.S. So we kind of reset back to this $8 level, which was really high, and then we invaded, Russia invaded the Ukraine, and we went ballistic. Now we've worked our way back up out of there. But if you look back, you've got this double top right here that goes all the way back to the 2010 and 11 highs, 2010, 2012 highs, right at 950. And we've bounced around there now for the last, let's go since last July, and now we've given it up. And so there's a pretty good technical argument here that now that we've given this up on the monthly basis, that we could reset these values all the way back down to the $5.50, $6.50, $7 mark pretty easily, and we could move there pretty quick. Now, what I want to do is now go back to the daily chart and just say, hey, this thing can move a long way without stopping. And so there's no reason to start to really get nervous about covering hedges or looking to buy the wheat market, because this move may very well just be getting going. And we can guesstimate that based off of the Fibonacci targets, okay? So if you take the move from the peak to the low that was made in August of 22 to the high that was made in October, and then you draw some Fibonacci extensions off of that, where might it go? And this level right here, which would correspond to this low, we call it the magnet, is a very important level. That's 821. Today we closed below that on a daily closing basis. That's significant because what it does is put in play the extensions at 1382 and 1618. And the probability of these getting hit is now much greater than 50%. I'm not going to say it's 80% or 90% or 65. I'm just going to say it's better than 50%. So the risk still remains down. Yes, there's some chart support right here, and yes, we could find some buying, and we could move higher, but this is a big impulsive drop. And if this level is to give way, then we need to look towards these Fibonacci targets and move forward. Now, and look for these levels moving forward. Now, if I add a new target based on this most recent high, so now you have two targets, okay? One coming from the rally that started off the big decline. The next target is coming from the rally from the most recent decline in October. And these targets are also pointing much, much lower. In fact, these targets are pointing now down into this 757, 730 area. And if you look, that's also the 1382 level from back here. So this zone, 730 to 760, would be a target area if you're trading off of these Fibonacci numbers. Another congestion area would be down here in the 678 to 650 level. So if we are to break lower, we should look down to this level, and then we'll make some decisions based on how we get there and how we trade as to whether or not we'll go to the next levels. Here's another thing that should be very concerning to people and make you not really want to step in and buy it, are these oscillators. So if you look at Force Index and you look at RSI, I'm going to put stochastics on here. If you look at any of these traditionally followed indicators, let me take Force Index off because RSI and stochastic are your most common. If you look at these, you're going to start reading a lot of, oh my gosh, they're oversold. We've come too far, too fast. These indicators are oversold. They're due for a bounce. Here's the thing. That is a true statement if it is a sideways, non-trending market. If this market is in a downtrend and really does take these lows out, then this is just confirming that the lows are in place, or that the downtrend is in place and the lows are gone. So this isn't an oversold buy signal. This is a new trending signal, and they can stay oversold for a long time. For instance, during the up move, they stayed overbought for a long time. So, for instance, back back in April of 22, as it was rallying, they stayed overbought for several weeks. Then at the peak, they stayed overbought from all of May, for most of May, and they did the same thing on the stochastics. So just because they've reached an overbought level or an oversold level does not mean that they have to turn around. They can stay overbought or oversold for a long, long time without a valid buy signal in place. Okay, so just because we've hit it doesn't mean it's a buy signal. You got to look lower until price action tells us otherwise. That's the main point on wheat. Now let's look at corn, and I want to show you a similar setup here on corn. So if we draw the Fibonacci extensions off of this move here and this subsequent rally, you can see the levels that we've been talking about down at 626, all the way down to the mid fives. And now today you can see, we're in an impulsive move lower. You can see that we broke the magnet here and closed below it, which pulls into play the 617 level, which is near the 61.8% retracement of the entire move from July to October. So this is an area where lots of Fibonacci numbers are clustered together, and it's an area where the market is likely to trade to, and then maybe have to trade sideways or potentially reverse from. And if we slice through them, then we need to look much lower, all the way down into the 570 level before we make any major decisions. So yes, we've come a long way, we've come fast, but this isn't anything that we think needs to be, that you should step in and buy, especially if you're a farmer. You need to just stay in your short positions here and not try to overtrade it. Don't lift any hedges, nothing like that. We just want to stay in this market and let it keep trading and give us more clarity as the move unfolds. Okay, so that's 9 minutes. I think that's enough. I just want to let you know what we're looking at and why we're thinking the way we're thinking. We just don't think that there's enough here to justify any adjustments. I think we're just warming up, and this move is going to continue to get worse, not better, unless something significant comes in and shakes these markets and makes end users want to come in and start buying. I hope that's helpful. If you have questions, give us a call. If you're not in positions and you need to get there, call us. We'll talk you through some ideas and what could help remove your risk, or at least decrease it. And if you're in positions, just sit tight. We will be quick to adjust them and help you move out of them if conditions warrant it. Remember, there's risk trading futures and options, and you should only do so in light of your own financial condition. We will talk to you again later this week, maybe tomorrow or Wednesday, depending on what markets do and how price unfolds. We'll talk to you later. Have a great night.